Welcome back, everyone, to Sip and Talk.
Great to be here again.
We've got quite a mix today, bouncing between some pretty wild global market stuff and then diving into how how propaganda really shapes things.
Yeah, it's a fascinating link, isn't it? How money moves and how narratives are built. We'll be looking at economic shifts and then this whole strategy known as Xuan.
Exactly.
Yeah.
But hang on, before we get into all the serious stuff, did you see Micky's teaser for his Europe trip video?
Oh, the 1 minute one? Yeah, I saw it.
Seriously. Only 60 seconds, but wow, the editing was just fantastic. I mean, I need that full vlog like yesterday whenever he gets around to cutting it all together.
I know, right? He's got skills. We're definitely waiting on that final cut, the full mix of memes, music, wine, travel, the work. So Micky, if you're listening, no pressure, but hurry up.
Okay, quick detour over. Let's get back to the big picture stuff, defining, this year, 2025. We've got sort of a two-part vision today, yeah. First, trying to make sense of these, frankly, surprising moves and maybe even stability in global markets.
Right.
And second, really unpacking the goals and the methods behind these big global influence campaigns, specifically China's Xuan.
Exactly. It's a lot to cover, so let's jump in.
Okay, let's kick off with the U.S. economy. It feels like it's always, strong, but also kind of teetering on the edge. And we're still dealing with this government shutdown situation in 2025.
Yeah, that's definitely causing friction. It's been dragging on, and then you had the threat from the president about potentially withholding pay for furloughed federal workers. It really highlights the split view, doesn't it, between like Wall Street and just regular people?
Totally. You listen to the big finance guys like Jamie Dimon at JP Morgan, and the take is basically, even if it's a long shutdown, say 35 days, the impact on the overall U.S. economy, the GDP, it's pretty limited, negligible even. Markets tend to just shrug it off.
But that's such a high-level view, right? It completely misses the real pain in specific places. If you're in the D.C. area, Maryland, Northern Virginia, places where the economy really leans on federal jobs and contracts.
Oh, yeah. It's devastating there.
Absolutely hammered. Cafes closing, people struggling with mortgages. And it goes beyond just local economies. Think about essential services. We've already seen big problems pop up with air traffic control.
Right. That's not just money. That's safety.
Exactly. It's public safety. It's logistics getting jammed up. So, yeah, the market might look past it, but the actual structural problems are very real.
Okay, so that's the friction. Let's switch gears to some positive news. A real bright spot in Asia, Vietnam. They just got a major market upgrade.
Yes, this is a really big deal. It signals, a fundamental step up in maturity. FTSE Russell, one of the big index providers, bumped them up from frontier market to secondary emerging market.
Okay, break that down for us. What's the practical difference? Frontier versus emerging. Why does it matter so much to, the big money managers?
Well, think of frontier markets as smaller, maybe harder to get into, definitely more volatile. They often need specialized funds. Emerging markets, though, they're bigger, more liquid. They attract the huge generalist institutional funds, the ones managing trillions.
Okay. So it's like opening the door to a much bigger pool of investors.
Exactly. The upgrade basically tells those big investors that Vietnam has made serious reforms. They've improved access for foreign money and cut down the operational risks.
And what were the key changes? What did they actually do to get that upgrade?
They tackled two big headaches for institutional investors. First, they got rid of the pre-funding requirement for stock trades. Before, foreign investors had to park their cash before the trade even happened.
That sounds incredibly inefficient. Ties up capital, right?
Horribly inefficient, yeah. Ties up liquidity, so that's gone. Second, they seriously improved how they handle trade failures, making things more predictable. These sound like, boring back office changes.
Yeah, not exactly exciting headlines.
No, but they're absolutely crucial. They're the foundation you need to attract that serious long-term investment.
And the numbers being thrown around suggest it's working. Huge potential inflows.
Oh, yeah. The estimates are pretty wide, but HSBC is talking maybe $3.4 billion in new capital. FTSE's own estimates go up to maybe $6 billion.
Wow.
That kind of money boosts liquidity, helps valuations across their stock market. And this isn't even the final step for them. They're aiming for full MSCI emerging market status, maybe around 2030.
Which would unlock even more money.
Exponentially more. That's the real prize down the road.
Okay, let's swing back to the U.S. The Federal Reserve seems caught in that classic bind, doesn't it? Their main jobs.
Yeah.
Keep employment high, keep prices stable, but the data's pulling in opposite directions.
It really is. You see the job market clearly cooling off, fewer job openings, unemployment ticking up slightly, but then consumer spending is still surprisingly strong, really robust.
Which makes it tough, right? Hiking rates seems wrong with a slowing job market, but cutting rates feels risky with strong spending.
Precisely. So why is spending holding up so well if jobs are softening? Usually that's the first thing to go.
Yeah, what's propping it up?
Well, a couple of things. For one, layoffs haven't become like massive and widespread like in past downturns. But the bigger factor, I think, is the wealth effect, especially for higher income folks.
The stock market effect.
Exactly. The market's been really strong, creating a lot of paper wealth for people with big stock portfolios. And these higher income consumers, they just keep spending, especially on services that kind of counteracts the slowdown elsewhere.
So with all this uncertainty, conflicting signals, what's the Fed likely to do? What's the, rational move?
Well, the thinking among many analysts is they'll probably go for an insurance policy, basically implement what they call insurance cuts.
Insurance cuts, meaning?
Meaning they cut rates preemptively, not because inflation is totally beaten, but to avoid accidentally tipping the economy into a recession because policy is too tight. It's about moving rates down towards what they think is the neutral rate. Analysts guess that's somewhere between, say, 3% and 3.5%.
So it's like easing off the brakes a bit, just in case.
Kind of, yeah. It's a risk management move, a really complex situation. Give the economy some breathing room without declaring mission accomplished on inflation.
Okay, speaking of things people run to for safety, gold. This is wild. Gold futures blew past $4,000 an ounce, record highs. And Goldman Sachs is now forecasting $4,900. This feels different. Like a structural shift, not just a temporary spike.
It absolutely feels structural. And the main driver isn't just inflation fears this time, it's geopolitical. The big story here is central bank demand.
Governments buying gold.
Yes, and not just nibbling. We're talking massive amounts. Estimates are around 80 tons per month globally.
Wow. Why the sudden huge appetite from central banks for gold? It doesn't even pay interest.
It's a direct reaction to what happened in 2022, when Western countries froze Russia's central bank assets.
Right, the sanctions after the Ukraine invasion.
That sent a massive shockwave through every central bank in the world. The message was loud and clear. If your reserves are in US dollars or euros and held overseas, they can be frozen. They're vulnerable.
Wow.
Gold, especially gold held in your own vaults domestically, that's basically sanction-proof. It's the ultimate diversification, the ultimate security blanket in this geopolitical climate. You see it really clearly with the People's Bank of China, the PBOC. They've been buying gold for, 11 months straight now?
So this is de-dollarization to de-risking kind of rolled into one shiny metal. And the market itself isn't huge, relatively speaking, right? Which means small shifts have big price effects.
That's the crucial point, the scale effect. The whole gold ETF market, it's tiny compared to, say, the U.S. Treasury market. The Treasury market is something like 70 times larger.
70 times.
Yeah. So if private investors or even just other institutions decide to follow the central banks and move even a small slice of their bond money or dollar holdings into gold.
Because the gold market is relatively small, that small shift causes a massive price jump.
Exactly. Outsized, volatile, intense price spikes. The risk seems fundamentally tilted upwards right now.
And I guess silver is even smaller, maybe 10 times smaller than gold. So any sudden institutional interest there could be even crazier.
Potentially, yes. It's like a leveraged bet on geopolitical instability.
Okay, let's pivot to stock performance, because there's a huge difference this year, isn't there? Asian markets, Korea, China, Taiwan, even some Latin American markets are up like 30%, 40%, even 50% year to date. Meanwhile, the U.S. and Europe are lagging, maybe 10, 15% gains.
Yeah, the gap is massive. And a big part of it is just valuation. Asian stocks are often just cheaper.
Cheaper based on what? Like price to earnings?
Exactly. PE ratios. You might see Asian cloud companies trading at, say, low teens PE ratios, maybe 13, 15 times their annual profit. But then you look at the big U.S. cloud companies, the hyperscalers.
Are way higher, right? 30, 40 times earnings.
Often, yeah. So that big valuation gap suggests maybe investors see more risk or slower growth in Asia. But it also means there's huge potential for those Asian stocks to just catch up on valuation alone.
And in China specifically, despite all the headlines about property problems, there are signs of actual economic improvement underneath, right? Supporting the rally.
There are. The industrial sector seems pretty solid. Recent data showed industrial profits up 20% compared to last year. That points to, real underlying economic activity, which helps put a floor under the stock market recovery.
Okay, which brings us nicely to tech, and specifically AI. The hype was huge, but now we're seeing a bit of a reality check about profits. That Oracle report seemed like a big splash of cold water.
Oh, it was brutal, a really stark data point. Oracle rents out its servers, mostly for AI training these days. They brought in $900 million in revenue over 3 months from that.
Sounds great, right?
Yeah, almost $1 billion.
But their gross profit from that $900 million, just $25 million.
Ouch, that's tiny.
Tiny. It immediately made everyone question the basic profitability of these huge cloud services, even for the giants. The cost of buying the servers, housing them, powering them, the capital expenditure is just astronomical, and it's crushing margins. And the AI products themselves. They aren't turning into the cash cows everyone hoped for. People are starting to doubt if companies like Alibaba or Tencent can really meet expectations just based on AI.
Yeah, I think we need to dial back the hype a bit. Gen AI right now, it's amazing for productivity. Someone called it autofill on steroids, which I like.
That's pretty good.
It saves time, makes things more efficient, but actually getting customers to pay a premium for unique AI features, that's proving really slow. Plus, in China, the competition is just insane.
How many models are there now?
We're tracking over 500 large language models operating there. 500.
Whoa!
So you get intense price wars, everything becomes a commodity really fast, it's hard to stand out.
So if you're looking at a recovery for, say, Alibaba, you're still mostly banking on their old businesses, e-commerce, logistics, not AI magic.
That's pretty much the consensus, yeah. For the next few years at least, AI is expensive to build, slow to make money from, and incredibly crowded. The recovery story still rests on their core established businesses.
And the sheer scale of investment needed for AI is just mind-boggling, that NVIDIA and OpenAI announcement.
Right. That partnership is probably the biggest compute build-out in history. NVIDIA is talking about investing maybe $100 billion, working with OpenAI to build 10 gigawatts of AI compute capacity.
10 gigawatts. Just put that in perspective. That's like the power output of 3 or 4 huge conventional power plants.
Yeah.
Just for AI servers.
The energy demand is staggering.
Yeah.
And in terms of hardware, we're talking maybe 4 to 5 million top-end GPUs. That's pretty much NVIDIA's entire annual production just for this one project.
And OpenAI needs that kind of scale.
Apparently so, to push their models further and just to serve their existing user base, which is enormous, like 700, 800 million people using things like ChatGPT.
And even that huge investment, it's still just a drop in the bucket compared to what might be needed globally. I saw some analyst estimate saying you'd need 10 billion GPUs for everyone on Earth to have one.
The demand is just far outstripping supply. It's a global bottleneck. And this shortage forces companies to get creative with financing. Look at Elon Musk's xAI. They raised $20 billion using that interesting SPV structure.
Right, the special purpose vehicle.
Yeah.
Remind me how that works and why it's clever.
Okay, so basically the SPV is a separate legal company funded by investors. It buys the NVIDIA chips. Then it leases those chips back to xAI over 5 years.
Ah, so xAI gets the hardware now.
Exactly. They get the chips they desperately need immediately.
But the massive cost doesn't hit their main balance sheet as debt right away. The FPV takes the initial financial hit.
Precisely. It pushes the risk onto the SPV and its investors. It just shows how inventive companies have to be just to get the basic tools they need to even compete in the AI race.
Okay, that gives us a really good sense of the market backdrop. Let's make that shift now to geopolitics, because economic power and let's call it information power, they really go hand in hand. We need to unpack China's big external influence strategy, this Duai-Xuan. It's not random, right? It's very deliberate.
Oh, absolutely deliberate. And maybe we should start by just defining the term. Duai-Xuan roughly translates to grand external communication, or maybe external propaganda. It's really a whole-of-government push.
Meaning all parts of the government are involved.
Yes, coordinated, aimed at shaping how the rest of the world sees China, and crucially, how other countries act towards China. And it seems to operate on 2 sort of foundational geopolitical goals.
Okay, goal number 1 seems pretty obvious. Weakening U.S. influence around the world.
Right. That means actively challenging America's global leadership role, constantly painting the U.S. democratic system as, unstable, messy, flawed.
And framing the U.S. itself as what? A bully. Protectionist.
Exactly. As a hegemonic power that uses sanctions and alliances just to hold other countries down, especially China. The aim is to undermine the main global competitor, create space for China's influence to grow.
Okay, that's one. And the second core objective, the relentless focus on Taiwan.
Yes, the systematic effort to isolate and marginalize Taiwan. This involves using everything diplomacy, economic pressure, information campaigns to shrink Taiwan's international space.
How does that work in practice?
It means constantly pressuring other countries, international organizations, everyone to publicly state their adherence to the One China principle every chance they get. The goal is to make it impossible for Taiwan to participate on the world stage as its own entity.
Okay, so those are the big upfront geopolitical aims. Weakening the U.S., isolating Taiwan. But let's go a bit deeper. Why spend so much time, money, effort on this? Media influencing elites, messaging. What are the underlying strategic intentions?
Well, that gets us to the really fundamental issue of legitimacy and stability, because the Chinese Communist Party isn't elected.
Right, no democratic mandate in the Western sense.
They face what some scholars call a deficit legitimacy. They can't just point to election results. So they have to constantly, aggressively advertise their success, promote their stability, argue that the China model of governing is actually superior to messy Western democracy.
It's interesting, that phrase, deficit legitimacy. It suggests a kind of underlying insecurity, maybe. Like if you have to shout about how legitimate you are all the time.
Yeah, some analysts definitely see it that way, the hiding something interpretation. That maybe the intense focus on legitimacy is compensating for internal worries, maybe it's historical issues, certain events.
Like Tiananmen Square in '89.
Potentially, or current internal dissent, or even economic anxiety, like the property crisis or demographic challenges they're facing. So the method becomes trumpet stability as uniquely Chinese. And if there are problems, immediately blame them on external forces, like U.S. containment.
Okay, legitimacy is one deep driver. What's another? Seems like pure economics has to be in there too, getting resources, technology.
Oh, absolutely. The Dawei-Schwan apparatus functions like a giant global PR firm for Chinese business. It pushes narratives like the Belt and Road Initiative, BRI, being all about mutually beneficial South cooperation.
Creating a positive image so companies can expand.
Exactly. Create a friendly environment internationally so Chinese firms can more easily acquire key foreign technologies, secure investment deals, and maybe most importantly, lock down access to crucial rare resources. Like, think about cobalt in Africa. Estimates suggest Chinese companies now control something like 60% of the supply there. That's strategically vital.
Wow, 60%.
Okay.
And the third, deep intention. You mentioned something about changing the rules of the game, like within international organizations.
Yes, this is the long game. Altering global governance norms from the inside. It's subtle, but really important. They work systematically to insert official Chinese forces and concepts, what some call Chinese language, into UN resolutions, into international documents.
Like a community of shared future for mankind, that kind of phrase.
Exactly like that. It's a slow, steady effort to shift the language and eventually the underlying principles of global diplomacy and international law.
And by doing that, they're essentially watering down the existing norms, the ones established mostly by the West after World War II.
That seems to be the goal. They also use the voting power of countries that rely on their aid or are otherwise allied to block things like human rights investigations or to weaken existing mechanisms for scrutiny. It's about gradually reshaping the international rulebook to be more accommodating to their system of governance. #4, multi-pronged regional influence strategies.
So let's break down how this plays out on the ground, because the tactics they use in, say, Africa seem totally different from how they approach Europe.
Completely different playbooks tailored to the region. Let's start with Africa. The main narrative there is the development partner narrative.
Focusing on shared history, common goals.
Right. Heavy emphasis on South-South cooperation, bringing up shared anti-colonial history. It's very much about positioning China as different from former Western colonial powers.
The message being, we're equals, unlike those Westerners who attach strings to their aid.
Pretty much. Infrastructure without the political lectures. And the tools are massive. They host those big FOCAC summits, pour money into infrastructure ports, roads, railways. They offer zero tariff deals for imports from some African nations. And the media piece is huge.
How so?
Well, state media like CGTN and Xinhua are everywhere, and China has actually trained over 2,000 African journalists.
Wow. So they're shaping the information flow directly.
It certainly helps influence the narrative within African media. Plus, they do a lot of political outreach, inviting African leaders and officials for governance experience exchanges, trying to build sort of shared ideas about how to run things.
Okay, now shift to Europe. The goal seems different there, more about dividing the EU, maybe influencing key people. You mentioned elite capture.
Yes, elite capture is a key tactic in Europe. It's about targeting people at the top. High-level politicians, academics, and influential think tanks, former diplomats, prominent social figures.
And how do they capture them? Is it just money?
Often there are economic incentives involved, yes. Things like research grants, funding for projects, maybe lucrative positions on boards after they leave office, or just privileged access. The goal isn't always to make them overtly pro-Beijing. Sometimes it's enough just to get them to stay silent on sensitive topics, human rights, Taiwan, Xinjiang.
Muting criticism.
Exactly. Or maybe just to subtly shift the debate in a more favorable direction.
And alongside influencing elites, there's also direct information warfare targeting the public, this paper wall idea.
Yeah. Paper wall refers to these large networks of websites that are designed to look like real, local European news outlets, but they're fake.
Spoofed sites.
Yeah, digitally anonymous,
Right.
pumping out huge amounts of content. Some of it might be harmless commercial stuff, but mixed in is pro-Beijing political messaging or disinformation designed to sow discord within the EU, undermine trust in local media.
We saw this very clearly in Europe after 2022 with the war in Ukraine, right?
Yeah.
China claimed neutrality, but their messaging.
Their messaging heavily favored the Russian narrative, despite the official claims of neutrality. Analysis showed their state media outlets citing Russian sources something like 366 times in reports about the war.
Blaming NATO, blaming the U.S.
Primarily, yes. Pushing the line that it was all caused by NATO expansion and American provocation. And then you had those revealing moments, like the report that Foreign Minister Wang Yi basically said in 2025 that China cannot accept Russia's defeat. That kind of blows the neutrality cover.
Okay, let's look at the Philippines. This seems like a front line for information warfare, especially with the tensions in the South China Sea flaring up the water cannons, the joint exercises.
Definitely. The info war there is very directly aimed at weakening the U.S.-Philippines alliance, which is obviously crucial for regional security. They've been caught funding local marketing firms.
Like that Infinitus company.
Exactly, Infinitus Marketing Solutions, funding them to run huge networks of fake social media accounts.
Now, what are these fake accounts spreading?
All sorts of stuff. Anti-American narratives, false rumors about vaccines, attacking the Philippines' own maritime claims, trying to make Filipinos doubt their government and their alliances.
There's that really strange story about the Chinese ambassador, too.
Yeah, that was bizarrely telling. On the exact same day, there was a serious clash at sea, Filipino boats damaged. The Chinese ambassador goes public and calls on Filipinos to share beautiful things about China online.
Talk about tone deaf. Or maybe deliberately distracting.
It seems like a blatant attempt to just muddy the waters, distract from the aggression with feel-good fluff. And the troubling thing is, even though polls show maybe only 10% of Filipinos actually want closer ties with China, this constant barrage of information and disinformation does succeed in fragmenting the national conversation's sowing division, which might be the goal.
Turning to the U.S., how did China respond, information-wise, to those really high tariffs Trump imposed in 2025, the 145% ones?
They immediately went into nationalist mobilization mode domestically. State TV started running old videos with Mao Zedong quotes like, "Never yield."
Wow, really dialing up the historical rhetoric.
Oh, yeah. Framing the tariffs as extortion, pure U.S. bullying. It was about rallying domestic support, pushing narratives of self-reliance, and directing public anger outwards towards the U.S.
But they also hit back economically in a very targeted way, didn't they? Aimed right at Trump's base.
They did. Their retaliation included a specific 15% tariff on U.S. soybeans. That wasn't random.
Because soybeans hit farmers hard, especially in states important to the president.
Precisely. It was a calculated move designed to inflict maximum political pain on the administration's key supporters, using trade policy as a political weapon, amplified by propaganda.
Okay, one more region. India. Relations were really bad after that border clash in the Golwan Valley in 2020. But then things seemed to shift.
Yeah, relations were terrible post-Golwan. But then, as the U.S. trade pressure started hitting both China and India, Beijing saw an opening. They started talking about Sino-Indian rapprochement, a strategic pivot.
And what was the narrative they used to try and bridge that gap, given the recent hostility?
They basically said, hey, we're both developing countries, we're both facing this Western protectionism, we should stick together. They pushed this idea that India and China should view each other as partners and opportunities, not adversaries or threats.
Positioning themselves together against the West.
Exactly. And trying to frame renewed ties as being central to this new China-influenced global South trade order. It's clearly an attempt to pull India away from closer strategic ties with the U.S. and its allies.
So this whole coordinated effort, Dawai Xuan, It obviously has real-world consequences for the countries involved, going way beyond just shaping opinions. Let's talk about the negative impacts. The most famous one is probably debt trap diplomacy.
Right. This is where the economic power directly translates into geopolitical leverage. China offers these huge loans, often for big infrastructure projects, but the terms can be tough.
How so?
Well, the loans are often quite opaque, meaning the full terms aren't public. And the interest rates can be high, sometimes 4%, 5%, 6%. That's often much higher than loans from, say, the World Bank or other traditional lenders. For countries already financially shaky, this can easily lead to them owing more than they can possibly repay.
When they can't repay, that's when sovereignty gets hit. Like the Sri Lanka example.
Sri Lanka's Hambantota port is the textbook case, They couldn't pay back about $1 billion loan for the port construction. The result, they had to hand over control of the port, plus a lot of land around it, to a Chinese state-owned company on a 99-year lease.
99 years. That's basically giving up control.
It's a direct transfer of a strategic national asset to pay off debt, a major loss of sovereignty. And you hear similar concerns about other projects, like Gwadar Port in Pakistan, that's a 40-year lease, potential military uses, and the crushing debt levels in places like Zambia and Pakistan are causing huge economic problems. It fundamentally changes the power dynamic.
Okay, so debt and sovereignty erosion, that's one major impact. What about the impact on information, on media freedom?
This is really insidious. China uses several methods to influence media in other countries. Sometimes they buy stakes in local outlets directly. Sometimes they just become a huge advertiser, providing essential revenue.
Or they just give away content for free.
Right, offering prepackaged news stories, videos, articles from their state agencies like Xinhua. The end result is often self-censorship.
Meaning local journalists or editors just avoid sensitive topics.
Exactly. They don't want to risk losing that advertising money or that free content feed. So they just steer clear of reporting critically on China, whether it's Taiwan, human rights, Xinjiang, whatever.
And this is widespread, especially in places like Africa.
Reports suggest it's significant. In some African countries, it's estimated that over 60% of the news content in local papers is just reprinted directly from Xinhua.
Wow. So Beijing effectively gets to control a huge chunk of the news people are reading.
It gives them enormous narrative control. And when you combine that with the fake news networks, like the paper wall stuff in Europe, it really works to polarize societies, undermine trust, and just make it harder for people to get neutral, factual information.
Then there are the criticisms about environmental damage and labor standards on these big Chinese-funded projects.
Yeah, this comes up a lot, particularly in Africa and Southeast Asia. On the labor side, the complaint is often that these projects bring in huge numbers of Chinese workers instead of hiring and training local people.
Which just makes local unemployment worse.
Right, and can cause a lot of social friction and resentment.
And environmentally, what are the typical complaints?
The accusations are usually that these projects tend to ignore or bypass local environmental protection laws to save money or speed up construction. This gets linked to things like pollution from mines, say copper mines in Zambia, or major ecological damage, like the impact of Chinese-built dams on rivers like the Mekong.
Affecting fisheries, farming downstream.
Affecting water security and agriculture for millions of people in countries like Vietnam, Cambodia, Thailand.
And the final impact area actually weakening the ability of international organizations to do their jobs.
Yes. This is about using influence within the system. By coordinating votes with allied countries or nations dependent on its aid, especially in places like the UN Human Rights Council, China can often block resolutions or inquiries critical of its human rights record.
So they're using the rules of the organization to shield themselves from scrutiny.
Essentially, yes. It actively undermines the ability of these global bodies to perform their oversight functions, not just regarding China, but potentially weakening those standards globally. #6. Outro and call to action. So if we try to pull all these threads together, the shifts in the markets, gold becoming this geopolitical asset, and then this incredibly detailed, multi-layered Dawai strategy, I think the main takeaway is that China's influence abroad isn't just random acts of diplomacy. It's this highly sophisticated, deeply coordinated, whole-of-government machine. It weaves together economic power, building infrastructure, and shaping information landscapes. And it really seems driven by those twin goals, reshaping the global order in its favor, and maybe most importantly, constantly reinforcing the legitimacy of the party back home.
It's a massive system, incredibly complex, and definitely crucial to understand if you want to make sense of global events. And, we've really tried here to just lay out the strategies and the reported impacts objectively. The idea is for you, listening, to take this information and use it to think more critically about the news and the narratives you encounter every day.
And we keep coming back to that idea of legitimacy, right? For a government that isn't elected, showing economic success is just fundamental. It's the bedrock of their claim to rule. It fuels the whole propaganda effort.
Which leads us perfectly to our final thought for you to chew on. Here it is. If that economic success is the foundation, what happens to the power, the coherence, the effectiveness of that whole propaganda machine if or when China's domestic economic growth really slows down or even starts going backwards?
That's the multi-trillion-dollar question, isn't it? Something to keep a close eye on.
Absolutely. A really complex question to ponder.
Indeed. Until next time.
Yes. Thank you all so much for tuning in and joining us for this deep dive here on Sip and Talk. We really, really appreciate you spending your time with us.
And please keep thinking for yourselves, keep questioning, keep analyzing the world around you.
You bet. And hey, don't forget to subscribe to Sip and Talk wherever you get your podcasts. And also, ask so seriously, go check out our buddy Micky's YouTube channel, Micky to Life. Memes, music, wine, travel vlogs. It's the perfect antidote to all this heavy stuff we talk about. You'll have a blast. All right, that's it from us. Goodbye for now. See you next time.